Hello traders, Gary Wagner here, just about 7:30 in Honolulu, 1:30 in New York on Monday, 15th day of June 2015, and this is the daily report for gold and silver. Although well off of the highs today, we still have a strong showing in the precious metals markets across the board. Gold trading moderately higher, up about $6.60, 1185.80. That is our current print on the day. That is with a high of 1190.20 and a low of 71.90. Silver really leading the way, up 1.61%, 1608. It is currently up about 25 cents on the day. We have seen silver trade to a high of $16.2350, the low $15.81, and currently just above $16 at 16.08 on the day. So traders, as we start the week this Monday morning, once again, it's all about Greece. Of course, we do have the FOMC meeting scheduled this week, but the focus today, at least, is on whether or not there'll be some sort of resolution in terms of the current Greek debt and some sort of bailout for money that they simply do not have to pay. That, of course, initially sent the dollar higher, sent the euro a little bit lower. The net effect, of course, on the precious metals as a safe haven was to move into the metals, moving them higher. I do want to start today by taking a look at our daily chart. This daily chart is in standard candlestick format, and an interesting thing that we're looking at, and that is that we're back to the upper ends of our cascading channel lines. And of course, the market has been down, but even with the market being down, we've seen a series of movements to the bottom end of the range, just above the mid-range, then again to the bottom, and now to the top. When I took a look at this market last week, of course, this being our daily charts, we had these two down days that kind of concluded the week, and my sense then was we would really travel quickly to the bottom end of this channel. However, that's not to be the case. If we take a look at the midline right in here, the midpoint within this channel line, you can see that that precisely lines up with where the low is, where support was found. And you have this at around 1170, somewhere in this area. Market's currently trading at 86, and you can see this high up at around 90, well above these channel lines. The thing that I'm really going to want to see on a technical basis is whether or not we can see gold close above this particular channel line, some sort of a breakout. Because on a technical basis, that will say spades in terms of a possible rally within the gold market. So we talked about the channel lines, or the linear regression that we have plotted here. Also, when we look at our MACD, moving average convergence divergence, what we see is that we are just at a cross. You can see this blue line right in here has just crossed into the area of our orange line. And that, of course, on a technical basis is significant, alluding to higher pricing in gold. So looking at our daily chart, we talked about a couple of factors that are showing the potential for some sort of an upside breakout in gold, but there really isn't any candlestick patterns that are evident from our daily chart. However, if we look at our very short-term chart, standard candlestick format, of course, this is a 4-hour bar chart. We certainly have this engulfing bullish and our confirming candle, which we just got, although we're trading well off of the highs at about the midpoint of this cycle as well as the midpoint of the day. This is bullish nonetheless. And based upon some of our studies, most importantly on this one, short-term Elliott wave, we're really looking at the potential for this market to move in some sort of a fifth wave pattern. This completing our wave 4. This is our wave 3 up, wave 4 down, and wave 5 could take us anywhere between 1195 on the low side and on the high side as high as about 1210. So very, very short term over this week. And of course, this is very, very fundamentally data sensitive because any news that breaks out with the EU and Greece, also the press conference that will be following the FOMC meeting midweek, could have an extreme effect on the price and could change any of the technical studies we're looking at. But based upon the information that we have now, we could in fact see gold track as high as 1210, as low as, call it, 1195. We'll call this blue area our sweet spot, but that is our immediate forecast for gold. So what about silver? As I said, when we looked at our official highs and lows according to our eSignal platform, we do have the high at around 23.5. We have a stop at 1625. However, when we look at the highs and lows as referenced by Kitco, it is showing a high of 1634. Again, our stop is at 1625. I am marking us out at 1625. I know that we will have some subscribers that are still in the market, but the majority should have been stopped out with a small profit short at 1650, covering at 1625, picking up 25 cents on the trade. When we look at this market, we are noticing some genuine potential changes in the market. One of the things, first of all, when we look at our cascading channel lines, and we talked about really throughout last week how silver was differing from the way we were seeing gold in terms of the fact that it was just drifting lower, but we weren't getting that oscillation that we were getting in gold from the lower end of the channel to the upper end of the channel. Today's a different story. Although gold has traded above that upper level channel, we can certainly see that silver has on its high tested that area. You can see that right here, although it's not traded through it nor even come close to closing above that. And we still have a little while until the close. We also see our MACD moving together. Now, this is on a daily chart. However, when we take a look at our half-a-day chart, and that's exactly what we're looking at here, 720 minutes, standard candlestick format, we get a couple of things that are, I believe, quite telling about the very near future in terms of what we're looking at. Of course, we have stochastics here, and they have been extremely, extremely oversold, and they've been oversold for really the better part of this month. But I think I discussed the fact that if you have a market that's continually moving lower in price, as we have seen in silver, as we've seen this dramatic decline right in here, you will always have the current price be close to the lowest lows. And stochastics is simply measuring a current price against the highest highs and the lowest lows over N or over whatever period of time that you're looking at. So the fact that it remains really oversold, that to me doesn't surprise me. But you do have, just as we saw on our daily chart in gold, on these half-a-day charts in silver, we are getting a definitive cross. And that cross, of course, I believe is a very, very telling that we could see some higher pricing. Also, when we look at our current Elliott wave count, and this again is a short-term Elliott wave count, or call almost interim. We had our ABC, we came down, this is wave 1, wave 2. It does appear as though we've completed 1, 2, 3, 4, 5. We have completed a wave 3. We are going into wave 4. And in terms of projections for our wave 4, it could be anywhere between, call it 1650 on the low, and on the high end maybe about 1665 to 1670. Once again, we talked about a sweet spot or a logical area short term in which we could see silver move to, and I would have to say that's right in here. As I said, anywhere between about 1615, 1620, as high as maybe 1665, 1670. Now, traders have gone ahead and pulled up a weekly chart and realize whenever we're looking at the pulse or the particular cycle of any of the markets that we follow, realize that just because a market is up doesn't mean the overall trend is up. We'll get a stair step up or a stair step down. And as I said, very short term, I am looking for this market to move higher. Longer term, though, is a little bit of a different story, because when we look at our long-term studies here, what we see is that we are possibly heading back into a wave one bear count. Wave one bear count, of course, which would indicate lower pricing. It appears as though 1, 2, 3, our long 3, our 4, this being our wave 5 down, some sort of an ABC correction right in here, and that would return us back to lower pricing. Realize that this is our longer term count within the market. We could easily see this market go to the targets that we just talked about before beginning to head south. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. And one side note, I do want to thank all those that have signed up for Trending Markets, the premier edition coming out today. And for those that want to enroll in the loyalty program, which will save you roughly 50% in terms of the subscription cost, today is the last day in which you can take advantage of it. Of course, starting tomorrow, you can sign up, but you will not get that loyalty program pricing. Again, Gary Wagner, have a great day. Bye-bye.